All right, so this is our adjusting entries video. The only reason why I felt like the adjusting entries needed a little bit more explanation is because of the tab for calculating for your adjusting entries. So I'm going to share my Excel spreadsheet again, the one I was sharing in the prior video, and I'm on that tab right now. This is calculation adjustments for calculation for adjusting entries. Now, this is where, if you really want me to be able to check your work, you need to fill out this piece here. Okay. If you don't care about me checking your work, you don't have to necessarily. But if you run into an issue, it's easiest for me to be able to check what's going on with your adjustments if I see some work done in this tab. Now, some of this might not be exceedingly straightforward, so I'm just wanted to talk about it a bit. The prepaid insurance. Now, there's four types of prepaid insurance the company had going into this year, and that is some of the stuff that is talked about on those first two pages of the Word document. So you're going to pull balances here for the different types of prepaid contracts, and then you have a place to input the remaining life in this column. And then the annual expense, well, that would just be the total amount of the contract divided by the remaining amount of the remaining amount of the policy. Right. So right now it's saying it's dividing by zero because there's nothing here. But when you fill it out, that will turn into an annual insurance expense. And then quarterly, of course, would just be the annual divided by four. Remember, we are in a quarterly system with this guy. They're reporting on a quarterly basis. So this was the first three contracts. And if you sum them here, you can make sure that you inputted everything correctly, that it should equal the balance of our prepaid insurance account at the beginning of the year, right? 12/31/21 or 1/1/22. This amount of contracts was generating this much quarterly insurance expense, but we also had a new policy. So then you would just input that here, the balance of the new policy, its contract life, and then do the math to figure out the annual, do the math to figure out the quarterly, and then the total insurance expense for Q1 will derive itself. The formula is still here, such that it'll take whatever you inputted here, or I'm sorry, up here. Let's just say it was like $10, $20, $40, $50. Okay, it's already summed itself here. And then we do the additional insurance policy. Let's say it's 30. That'll add it for the total amount of insurance expense for the first quarter for all those contracts, right? So same idea here with the property, plant, and equipment. Here's the stuff they began with. That's listed on the first two pages. The remaining useful life of each is also put in there on that Word document. Then you do the math here, get the quarterly amount, and then recognize that they had an additional building. Right. What else do we got? The patents. Okay, the patents. We had an original patent, purchased a new one together. Those will be the amortization for the first quarter. Any unearned revenue piece? I don't. I want to say that. Let me just read real quick here. I don't believe there's any issue that you have with unearned revenue. So you don't, nothing really is coming from that. Don't worry about it. You can just ignore this piece. In fact, I even have like a author's comment here about adding something, or so don't worry about this row here, or these rows with unearned revenue. The borrowings you do need to worry about. You have notes payable, additional note payable that was issued during the year, and then there are interest rates here that gets you the annual, get to the quarterly. This piece right here is just for your income tax adjustment. So you will go after you've done all your other adjustments, you would total the revenues here, both the unadjusted and the adjusted revenues you just included in step four. And then here, all the unadjusted expense accounts plus the adjusted expense accounts you just recorded in step four. Those two will give you your pre-tax income multiplied by the tax rate to get the tax expense. So when you're doing your adjusting entries, let's say the first one we do is with the prepaid rents. prepaid insurance, I'm sorry. So we would get insurance expense and then prepaid insurance as the credit. And this, all of these will be occurring at the end of the first quarter on March 31st. I had to do the little song in my head to make sure there was 31 days in March. And then you can cell reference so that again, if there was a mistake, you adjust it on on your calculation tab, it'll flow all the way through. I'm going to cell reference the insurance expense from my calculation for adjusting entries. I hit enter, it brings it over. And then because it's the same amount, I'll cell reference the same there, right? And then again, that'll just create a continuous flow of information. That way, if you finish everything and you're like, whoa, I messed up on an adjusting entry, you don't want to lay all that work out again and potentially miss a piece. And then all your stuff starts coming unbalanced. Use cell referencing. Um, anyway, that is about all. I explained, for example, that when we take this over to the ledgers, I'm going to go to the income statement accounts because I'm linking insurance expense. Look for the insurance expense piece. Here we are. Here's this ledger. It did not have a balance to start. Didn't have an unadjusted balance. We did just update it with an adjusting entry. That puts it in here into my debits and credits column. And then I would start same formula here. The beginning balance plus any debits minus any credits, right? And then drops it there in the adjusted balance green filled row. So you know that there was only one adjusting entry to insurance expense and that's it, right? The next thing that'll happen is we'll close it out with a credit and it'll go to zero. Okay, I think that's it. Again, if you have any issues or run into anything, let me know, and I'll be happy to help you. And thank you for watching.